The views expressed in this podcast are not to be taken as either trading nor financial advice. Neither the announcer nor the Sirius Report make any claims to be certified financial advisors, and all reporting is dedicated solely towards being both informative and educational. Good afternoon, everyone, and welcome to the Sirius Report Market Wrap-Up for Monday, December 2nd, 2024. My name is Ken Shorgen, and we're going to take a look at how the market's fared today. We're going to take a look at some of the economic data that's coming up for this week. The first week of each month is always pretty big. And we're going to take a look and pose a question. If what is coming out of the Trump administration on little tidbits and news dropping regarding Bitcoin being a reserve currency to the Fed, to the Treasury, etc., then could we potentially see, like in 1933, another confiscation of Bitcoin from average Joes, retail investors, anybody who owns it, the same way they took gold from the public in order to protect it as a reserve currency? So we're going to take a look at that. And for now, let's go ahead and jump right in and see how the market's fared. Well, the Dow started in a decline today, down about 130 points, maybe down to 150, then closed out at minus 128. Dow ended up at 44,782, while both the S&P 500 and the NASDAQ were in the green. S&P was up 14.77 points to 6,047, and the NASDAQ was up 185 points to 19,403. But the bond market seems to be telling a different story. We've seen an inversion of the 2-year and the 10-year. We've seen it revert back, and now we're seeing an inversion again. The 2-year ended up 0.012% to close out at 4.186, while the 10-year is now at 4.196, 1 basis point difference. So it's going to be interesting to see if the short end of the curve suddenly inverts and is stronger than the back end of the curve. Looking at the dollar, well, the dollar had gone as high as 107 over the past week, had a little bit of sell-off going into the weekend, and was back up today. The dollar and the DXY against a basket of Western currencies was up 65 cents to 106.39, while gold and silver, which have been getting the beat down primarily due to expiration dates and short covering, an attempt at short covering, both were down again today. Silver was down 10 cents, closing out the trading day at 30.59, and gold was down $11.10 to 26.39. Meanwhile, cryptocurrencies. Taking a look at Bitcoin, Bitcoin was down 1.59%, closing out the last 24 hours of trading at 95,724 with a high of 98,193. Interestingly enough, at Bitcoin, it has gotten to 99,000 but has not touched 100,000. Every single time it hits that resistance level, it gets beat down or is kept from getting over 100,000. I wonder if that has anything to do with its sudden treasuries to tether connection, but we will have to see going in the future. Meanwhile, Ethereum was down 2.28% last 24 hours, closing out at 36.26. On a flip side, two other cryptocurrencies, Ripple, or XRP, was up 18.5% to $2.72 per coin. And a couple of other ones, Chainlink, not even sure what that does, was up 30.54% today to $24.96. In the oil markets, pretty flat day for both WTI and Brent crude. WTI was up 10 cents, closing out the trading day at $68.10, while Brent crude was up 11 cents at $71.95. Looking a week ahead, well, we've got several Fed governors and Fed presidents who will be speaking this week. trying to gin up the economy. Meanwhile, we have ISM manufacturing. We have on, let's see, today is the 2nd. So we have tomorrow, JOLTS and job openings. That will be interesting to see what their revisions are now that the election's over. Then on Wednesday, we've got S&P Global Composite PMI, factory orders, and ISM services. Meanwhile, on Friday, we've got non-farm payrolls, the unemployment rate, and of course, the average hourly earnings to see if anybody actually got a pay jump. Well, looking at something interesting, in the optimism of some of the surveys, Trump's victory seems to have sparked optimism, though it's not showing up in the actual numbers. There was resurgence post-election in confidence in the S&P Global's manufacturing PMI, rising to 49.7, the highest since June, and the manufacturing PMI jumping from 46.5 to 48.4. Taking a look at both of those, they're still under the contraction stage, below 50, but they are on the side up. Optimism about the year ahead has improved to a level not seen in 2.5 years. But in contrast, current production levels for a 4th straight month in November, dropping to a rate not exceeded for nearly 1.5 years. So export sales continue to fall sharply. Why? Because nobody wants the dollar, and they're afraid of what the U.S. or trade with the U.S. over the sanctions. Manufacturers have also recorded a slower rise in input costs in November, but it was only modest. So that should affect PMI when it comes to the prices paid for production, as opposed to CPI, which is prices paid for consumers. Well, of course, sorry, cough button there. Of course, we had Black Friday and today as being Cyber Monday. Winners and losers of Black Friday 2024. Moving down, we're going to take a look at the winners. Of course, e-commerce. Cyber Monday appears to be losing its meaning, with many shoppers using their phones and computers on Black Friday instead of waiting till Monday to do so. So, of course, that means that fewer and fewer people are going to Main Street brick and mortar stores, and we're going to take a look at what that has led to in the next article we touch upon. But with that being said, Salesforce found on Friday, online sales in the U.S. rose 7% year over year to 17.5 billion, and crossing the 10 billion mark, and is a big e-commerce milestone for Black Friday. We also have the chatbots and AI, which are giving a lot of influence to what people buy, where they buy, etc. Toys are a big category. It has an 8% downturn in sales last year, but toys were good this year. Online sales up 622% as compared to last year. Losers, of course, I mentioned in-store shopping. Old-fashioned seasonal enticements like doorbusters and entertainment. The Mall of America said that people began lining up early afternoon on Thanksgiving Day, and it welcomed about 13,000 shoppers. However, it looks like this year's e-commerce boost came at the expense of the brick and mortar stores. Black Friday, according to one of the consumer surveyors, Kearney, noted that Black Friday felt quieter this year in stores, while also another Kearney partner noted relatively subdued day at Garden State Plaza in New Jersey. Finally, prices and margins. Black Friday has long been about getting good deals, but some discounts this year were especially steep. Categories more exposed to inflation and higher priced items were primed for deep price cuts. Plus, retailers themselves may preemptively clear out inventory that could eventually be subjected to Trump's tariffs. One of the numbers I'm really looking towards is auto sales, because automobile sales have fallen through the floor. And you have to wonder if any of them are being bought this year for gifts or for, the Christmas holiday season. Because if so, then it would be interesting to see the massive amounts of discounts they're going to have to do. Because right now, the layoffs that are taking place in the auto industry are reflective of the fact that there are so many dealerships with automobiles that they can't get rid of, and they're backed up to the point that they're actually renting neighboring parking lots in order just to be able to store their cars. Well, visualizing the survival rate of U.S. businesses over the last decade. Let's see. There's a new chart out from visual capitalist Pallavi Rao tracking the survival rate of all private American companies that have been born since 2013. How hard is it to run a business? Well, from this date, let's see. Agriculture and forestry businesses born in 2013 were the most resilient. Utilities second. Manufacturing, real estate, retail trade. They all lasted in 2013, but as of 2023, 51% of those in the agricultural and forestry business have failed. 41% utilities. Much of that is oil and gas, as the Green New Deal policies have pretty much put frackers and the like out of business. Real estate down to 42%, and mining, oil and gas is the biggest loser. They have a retention rate of just 25% of businesses have survived in the last decade, started in 2013. Okay, well, there is trouble brewing over in France. But because they don't have a government, and Macron has pulled some shady things to ensure that he remains in power, and no coalition has been able to take over the leadership roles, they have a mandatory budget that's upcoming. And if that mandatory budget isn't passed, then automatically a vote of no confidence comes in, and it could force Macron out of office. So with this being said, what's really leading this? Debt and stagnation. France's economic challenges are rooted in years of sluggish growth, high unemployment, and rising public debt. The nation's debt to GDP ratio is now at 110%. And for those who have listened to our podcast in the past, Kenneth Rogoff has shown that when you get to a debt to GDP ratio of 90%, then any additional money that is, or currency that is printed out of thin air by the central banks, has a diminishing return, an accelerating diminishing return. And when you get over 100%, it usually means that $5 to $10, or in this case, euros, created only creates $1 or euro of GDP growth. So with the amount of, this is one of the reasons why the massive amount of debt has accelerated both in the Eurozone and the United States, because that is what they're doing to support the economy. And every time that they want to raise GDP, they have to print upwards of $10 to $15 of new currency just to get $1 of GDP growth. So France is already in trouble. They really don't have the capability to deal with this budget crisis. They're going to have to print more debt. And that, of course, is just kicking the can down the road, exacerbating the problem. Okay, the one thing I was going to mention that we were going to talk about today, Bitcoin nears 100,000 as the Trump Council is expected to implement a Bitcoin reserve. Gary Gensler officially announced he is stepping down. This is from a few days ago. His position as chairman of the SEC, and minutes later, Reuters reported that Donald Trump's crypto council is expected to establish Trump's promised Bitcoin reserve, a Bitcoin reserve that would see the United States purchase 200,000 Bitcoin per year for 5 years until it had 1 million Bitcoin. Right after both of these, Bitcoin continued its upward momentum, breaking 90,000 or 99,000, but not quite touching 100,000. It's hard to contain bullishness, thinking the U.S. is going to purchase 200,000 Bitcoins a year. But that brings the question, is Bitcoin a decentralized form of currency? So anybody who follows the Satoshi Nakamoto white paper and has been pushing that Bitcoin is a way to have an alternative to the dollar. You should not be happy in this, but if you're just in it as a speculative asset to get the highest price you can in dollars, then you absolutely want to do this. Now, where's the US going to get the money to purchase this? Well, that's going to be the great question. And it brings to light something that was brought up by Peter Schiff and Coin Telegraph just a couple days ago. Let's see, where was the part? Oh, we already know that El Salvador in 2021 adopted Bitcoin as legal tender and bought about 200 coins. The country has since increased its holdings to 5,942 Bitcoin, worth about $571 million at current prices. But now we have the question, is, let's see, how exactly are they going to get the Bitcoin? Well, if MicroStrategy, which has been buying it hand over fist and borrowing hundreds of billions of dollars to buy as much Bitcoin as they can, are they going to sell it to the government? Is the government going to overpay or that? Or is it going to be like 1933 when all of a sudden the dollar was losing its potency, absolutely worthless, and they had to nationalize gold in order to strengthen the dollar, stop deflation, and make it illegal for individuals to have? If they only started with 200,000 Bitcoin, one, the vast majority of retail investors don't have it. 50% of all Bitcoin holders have less than 0.1 Bitcoin. That's 50%. Most of them are held in wallets. The top 1 to top 4% own about 95% of all Bitcoin. So, is there going to be a confiscation? Well, the retail investor is likely not going to be affected. The same way if they tried to nationalize or confiscate gold again, well, most Americans don't have it. They've been programmed that gold is not money, and they don't, they put it in the stock market, they put it into treasuries, they put it in real estate, but very few people put it into gold anymore. So confiscation of gold from individuals would cost more than it's worth for the amount of gold that they would get. But the question is you have all this Bitcoin on the blockchain. And if you think that the government doesn't have a way to tap into the blockchain the same way it was able to put a bank holiday and drill into safety deposit boxes. Sorry there. Let me get something to drink here. Yeah, the way they were drilling the deposit boxes, if you have your Bitcoin on any type of, if you don't have it out of the system, or like at a CoinDesk or Coinbase, etc., where you are involved in trading it, anytime you're in one of those financial institutions, they are now being regulated by the SEC. The SEC can freeze those coins at any given moment, the same way that they nationalize gold, and of course they can confiscate it as such. It's one of those old sayings, if you don't hold it, you don't own it. And by having your money, your Bitcoin or etc. in a bank, you are, for all intents and purposes, meaning that you have your trust in agencies that have already proven in the past that they can confiscate things with the stroke of a pen. So, Bitcoin. If Bitcoin is going to become a government reserve, then really is it fulfilling its purpose as a decentralized form of money? No, because it's going to be used to backstop the dollar. Anyway, just want to thank everybody as always for stopping by to get your market wrap up here at the Sirius Report for Monday, December 2nd, 2024. As always, thank everybody here in the Sirius Report community for your support. Don't forget to like, subscribe, comment, share this with anybody you think is be important. And until the next time we get together, have a great day.